Good morning, traders and investors. Roger Scott here, senior strategist for Trading Pub. Now, it's Tuesday, it's September 5th, and it's about 7:57 in the morning. The market's going to gear up and open up in about an hour and 33 minutes. And that's about as specific as I can get. Before we begin, make sure to like this video, subscribe to our channel, hit the bell on the YouTube channel so you make sure to get alerted when my new video comes out every morning at around 8:30ish in the morning, about an hour before they open. Or subscribe to our Telegram channel. You'll get the video when I post it on YouTube and post a link on Telegram about 5 minutes after that. To get on Telegram, go to rogerscott.com/Telegram. rogerscott.com/Telegram. If you have questions or comments, feel free to email me, roger@rogerscott.com. Couldn't be easier than that, right? roger@rogerscott.com. Or post your question below the video. I respond to each and every one of them throughout the day, and I love seeing questions there. I use them for my VIP room all the time. Now, let's get into this. What are we wasting our time for with all of these pleasantries? All right, Nasdaq is down 40 points. The Dow's down 9 points. This is random, although I don't like coming in after a holiday weekend to see the market down like this. Now, it's not going to be a tumultuous week. We're not going to have massive reports, but we're going to have some sneaky ones in there. This week, the rhyme this week, the thing that Wall Street is going to be focused on this week is cost and productivity. You've got the Institute of Supply Management right here. You've got the the Purchase Managers Index. I always confuse these names. This is the Institute of Supply Management, and this is Purchasers Managers Index. Excuse me. I keep saying producers. And both of these reports are going to be fairly important today. Also, it's tomorrow. We also have factory orders, and I want to see if factory orders increase or decrease. But this week, we're going to get to see if demand for supplies is increasing, if prices for supplies are increasing, if factory orders are increasing, if productivity and cost is increasing, and that's going to be the big rhyme this week. And earnings, you're not going to see, and Fed, you're not going to see a big news from the jobless claims. They've been really solid. I mean, this number's been holding on in the low 200,000s. It's not really an issue. So I think the biggest things are going to be in costs and demand versus supply and productivity and supply chain orders. That'll be very interesting. Again, just when we thought we're out of earnings, we're not out of earnings just yet. I mean, obviously, we're out of the big cap, and finally, we can find trades all day long. But just to give you some idea, you've got Zscaler today. That's the big one today. Tomorrow, you've got Dave & Buster's, and a lot of these earnings will impact other related companies. So they don't just impact the company itself. Like, for example, Dave & Buster's is a consumer discretionary company. If the numbers come out really bad, amusement parks, entertainment, those type of companies video game companies, they may go lower as a result of this company. So it's not just the company, it's the impact of the company on the entire sector. This may have impact on the consumer discretionary sector. You've got American Eagle, clothing company. You got GameStop. Don't get me started with GameStop on Wednesday. You got Sportsman Warehouse. Thursday, you've got DocuSign, Toro. You've got G3 Apparel, DocuSign, smaller companies. Friday, you've got Kroger. Now, that's pretty big. Why? Again, that could impact consumer discretionary, consumer staples. Kroger is a consumer staples, consumer discretionary company. Supermarkets will tell us if food prices are increasing, if folks are shopping at supermarkets and spending the same amount of money. This goes hand in hand with the Purchase Managers Index and the Institute of Supply of Supply Management. So again, this will tie in everything with us. Here's the implied volatility for each of these. DocuSign, 10%. GameStop, 14%. They're looking for swings. So if you don't agree with this, and if you don't think the stock will have a swing this big, you may want to sell some premium. And we'll talk about that in the VIP room today. But again, don't forget these earnings. Now, let's talk about the big stuff. Bonds. I told you last week I didn't like the fact that we didn't break above this level. I didn't like the fact that we're trading below the 50-day moving average. I didn't like the fact that we're trading below the 200-day moving average. Let me just tune that out. You could see the trend is clearly down. And unfortunately, we had this nasty red candle, which engulfed most of the price action right here. pretty much broke down all of this, and now we're at the low of this range. So if bonds break below 94, bad. And remember, when bonds go down, the long bond goes down, that puts more pressure on technology and the consumer discretionary and those type of stocks. Looking at the S&P, notice this high is higher than this high, and when we were coming up here, we were still far away from the all-time high, which is near the 480 level. Is that an all-time high? Yeah, it is. That's near the 478, 480 level. We're down here. Now, I was very skeptical that we were going to reach that level. I was very skeptical that we were going to reach this level because I don't think the market is that strong right now. But, what the hell do I know? And it looks like we're turning back down. Now, we still haven't broken. Now, this support, this 450 line became resistance. If this becomes support, in other words, if this became support, it was resistance. Excuse me, it's been a long weekend. This became support, used to be resistance. If this breaks down, if this becomes resistance again, the 450, and we break the 50-day moving average, it's not going to be good for stocks. Look at this big bar right here, the 50-day. Well, I'm very skeptical, and I think we're going to break lower, and I think what's going to happen is we're going to make a higher high. I just don't see that AI revolution breaking us higher. I don't see the sentiment. I don't see the market. I don't see a major catalyst for us to go higher right now. So I actually think we are going to break lower. Now, volume is a little bit on the lower end, but that's also because of the holiday week that we had. And remember, last week was the last week of August. So you're not going to have big volume during that period. That's just not a reality unless there's something really crazy going on. But volume should pick up as we get towards the middle part, Wednesday or Thursday, not today. Today, people are still coming back. It's going to be a sleepy Friday type of trading unless there's something major happening. But the way this is looking to me, this looks to me like it's going to break down and come back and kiss this, partly because the bond market is already cracking down, and the QQQ is also coming close. It couldn't break this level. Now, I know what you may be thinking, and this may be true. Last week was a holiday week. There wasn't much action. We kind of folded. Let's see what this week gives us. I agree. Let's see. But the fact that the bond market are already at the bottom, the fact that the SPY is already hitting touching the red line here, the 450 level again, and then the fact that the Nasdaq is not cooperating is not a good sign. It's actually a really bad sign. All right. So as you can see here, S&P 500. The S&P 500, you got 50% of stocks trading below the 50-day moving average. Things are mixed right now. Utilities, you only have 7, so you can expect some upside. Energy, you've got 96, so there's a lot of liquidity around energies. And I'm not giving up on energies just yet. I like energies right now. Matter of fact, I think a lot of market cap is going to move towards energies. Now, we may have a little pullback. Who called this breakout right here for you guys? Yes, I did. I think we're going to come back down, though. I think it's a little too much, too fast. Don't expect miracles out there. They just won't happen. In terms of the broad market, in terms of what we're looking at, I still like healthcare. Hold on a second. Let me give you healthcare. I still like healthcare quite a bit. I like where we're at. I like how it's moving. I don't like the fact that it's so choppy, and I don't like the fact that it's range bound, but I like it better than I like consumer discretionary right now. See that? And this is the problem. What is consumer discretionary doing? It's already back on that line. It's already at the 50-day moving average. Let's look at technology. Technology's still a little higher. Hoping I'm wrong and it won't come back here. Let's look at SMH. I want to give you a good little review here of what's happening. SMH is looking pretty good, but it has to go higher. It has to break out. It has to break out. And with the bonds sitting right here, I don't know if that's going to happen. Let's talk a little bit about global economy and what we can expect from global economy, and then we'll go into the nitty-gritty details. Now, China, that's the other thing I forgot to mention because I haven't done this yet. China is starting to wait on sentiment. So you don't just have earnings. You don't just have the bond market. You don't have a hell of a lot of Feds. You don't have the SPY hitting the line. You also have fundamentals. Subdued economic data from China weighted on sentiment while investors looked ahead for a fresh batch of U.S. economic data and speeches from the Fed. Aside from factory orders and the Purchase Managers Index and Institute of Supply Management, you're going to have a lot of Fed speakers this week, which is a good thing because I want to see what they're going to be talking about and if they're going to be changing their tune. I think they're going to keep things the same. We're moving in the right direction. Inflation is sticky. It's taking a longer time than we expected to come back down. So S&P is rising to a 4-week high on Friday. But again, I don't like the trading action. I don't like the bars. Dell did really, really well, like really, really well. Rose over 21%. I remember someone talking about that stock. Who could it have been? Lululemon, up 6%. I remember someone telling you to sell a put on that last week. Who could it have been? Labor Department added 187,000 jobs above the expected figure of 170, which means the market is not tightening as much as they thought, which on Tuesday, we thought it was tightening last week, but on the JOLT survey, but they added, looks like they're adding more jobs, which is not a good sign. They're not adding less jobs. U.S. August ISM manufacturing index rose to a 6-month high, stronger than expectation. Unemployment rate rose to a 1.5-year high. That's bad. That's not moving in line with tighter job market. Unemployment rate rose to a 1.5-year high. They added 187,000 jobs versus 187. This right here is what caused the market Tuesday. JOLTS report that the job market is tightening. Does this report look to you like a job market is tightening? They added 187,000 jobs instead of 170, and unemployment rose to a 1.5-year high. So that could negate that report, the JOLTS report that came out on Tuesday and broke through the 50-day moving average. Cleveland President Mester stated on Friday that although there has been strong progress, I agree, inflation remains too high and labor market continues to demonstrate strength. Well, we'll see about that, right? 1.5-year high unemployment. Meanwhile, they're pricing in only a 7% rate hike this month, but 35% chance in November. And I think we will see a higher rates in November. But again, let's see how things go. I can't predict the future. Well, you've got the Institute of Supply Manager, non-manufacturing. You've got the non-manufacturing prices. I want to see how the prices are holding up. Because remember, prices, labor, inflation, hello. You've got crude oil inventories, and then you've got a bunch of speakers, Fed speakers. You got Logan. You got Harker. You got Williams. You got Bowman. You got Goolsbee. Today, you got factory orders. Again, prices. Are prices going up or are prices going down? And are factory orders demand going up or down? Very, very important. Don't like the fact that China had a negative news. It's pushing the world economy lower, but Europe is holding on pretty well. China exposed stocks are under pressure after private sector surveys show China's service sector expanded at its slowest rate in 8 months. Not good. That puts pressure on U.S. Closed at disappointing service sector data renewed concerns over the country's fragile economic recovery. A private sector survey showed on Tuesday that Chinese service activity expanded at the slowest pace in 8 months. Well, we're going to see how we're doing on factory orders. I want to see how we're doing here. Japan, they bucked the trend and closed at a 1-month high as investors digested stronger than expected service activity. So you see, we got a lot of service activity. This week is all about cost, productivity, inflation. That's what's important. Oracle gained 1%. There may be a little rally on network stocks. Corteva rose. There may be a little rally on medical healthcare stocks. Is Corteva a healthcare stock? Hold on. Let's see. It's not a health. It's agricultural stock. See, I'm crazy sometimes. Sometimes I say crazy things. All right. So you guys understand exactly where we stand. You're going to keep an eye. You're going to keep an eye on the QQQ, and you're going to keep an eye on the 50-day moving average at 371.72. On the Dow, you're going to keep an eye on that. It's at 34,700 level, and on the SPY, it's right here at 446.63. Keep an eye on the 50-day moving average and how it reacts in light of the data. Now, I've got a couple of day trading stocks for you. Oh, yeah. I didn't forget about you. So, Helsius Medical. The stock is a 200-day moving average. The stock is an awful company. Look at this. I mean, it's awful. Here's how I would play this. Don't do anything unless. Here's how you play this. You short this puppy. You short this puppy under $10.50. If it goes to $10.50, you short it and you sell it back when it goes to $8.86. You don't want to go long. You want to sell it at $10.50. Next one is UPTD. Trade up. Look at this. The stock is up over 100-something% in 3 months. Look at this thing. It's going nuts. It came up all the way to $31. Now it's at $21, and I think it's going to come all the way down to the moving average. Here's how I would play this. I would sell this sucker. I'm not kidding. I would sell this sucker. Oh, it's already down 6%. It's already down. Okay. Here's what I would do. I think this thing is going to go all the way back to the moving average. What I would do is I would sell this sucker at $13. If you see this trading at $13, you sell it and you cover this thing at about $11, $11 to $10, somewhere where it goes below the moving average. I'm pretty confident it's going to go below moving average, and it looks like it has absolutely dried out in volume. So you sell it right here at $13.38, and you cover it right around here at around 10, around 10ish. Give it about $1 or $2. Now, before I let you go, I've got something big for you. Most of this year's big gains have been on the back of what we call the Magnificent Seven. You know the names: Apple, Microsoft, Alphabet, Amazon, Nvidia, Tesla, Meta, all of them. But that's a subset of stocks that are blowing these mega caps. Yes, there's a subset of stocks that are blowing these mega caps out of the water, and hardly anyone knows about it. Some of them are up 300, 400, 500%. I call them code breaker stocks. And right now we can target the most explosive code breaker stocks for high probability trades. Click the link below, get all the details, don't miss out. And remember, subscribe to my Telegram channel, subscribe to our YouTube channel, click that bell so you'll notified every time a video comes out. I'm about to upload it right now. I'll talk to you guys later. Have a great day. Feel free to send me an email, roger@rogerscott.com. Post comments below this video, and have a great week ahead. I'll see you in my VIP room at noon today. Bye.